Class 11, we are continuing with the chapter Purpose and Nature of Business. So now I will explain what is the role of profit in the business. That means why profit plays such an important role in the business. Number one, for survival and existence in future, adequate profit is required. So if a business wants to survive in the long run, it wants to exist in the future, so that the business is not for a time being or not for a single time period like 1 year or 2 years. If it wants to survive the face of competition from other business houses, and if it wants to exist in future, it needs a strong capital backing to every time finance its production. So how it finances its production? It needs to build up the capital standing, the required amount of money. Now what provides that money? Adequate profits which are generated in the current period. Suppose in 2020, this is the current period, whatever profit the business house gets, a part of the profit it retains and holds back. So it retains the profit and uses it as a capital for the next period for production purposes. So profit is required for survival of the business in long run and for continuing the production in the long run. Number two, expansion also needs sufficient amount of capital. Profit forms the source of finance. So if a business house wants to expand, that means if it wants to open more than one outlet, if it wants to capture the main markets present in the different corners or in the different areas, so it has to hold business not only in a particular place, but it has to shift and expand its outlet. So how expansion is possible? Now if the business wants to increase its outlay, if it wants to conduct the production service over there, it needs land, it needs a proper building, it needs few people to organize the work and everything. It needs to buy more raw materials to continue with the production works. So extension or expansion of business also require some amount of money or capital. And if the business generates profit, that profit becomes a source for the business and helps the business to think about its further expansion. Number three, measure of efficiency. Now, whether a business is running good or bad, how will you understand? You will understand from measuring the amount of profit it realizes at the end. So, first it starts with production and then it conducts trade and it makes a profit from the sale, or it makes profit through trade. Now, how much, the degree of profit earning, whether it is more or whether it is less, it determines how good is the business. If it is earning more profits, making more money, so that business turns out lucrative or profitable, so it shows that the business is efficient enough to generate more profit from its capital investment in production. So it is worth holding such a business. Now if it generates very less profit, that means after capital investment, suppose 50,000 is capital investment for production and it only recovers 70,000 at the end. So it has made a capital outlay of 50,000 just to earn only 20,000 return. So it shows that the profit earning capacity is less and the business is not that efficient or not that smoothly running. Number four, profit is a reward for risk bearing or risk taking. Now what I have already said, that a business faces uncertainty. It faces uncertainty means there can be situations where it might end up in losing. So there is a risky thing. Now a salaried employee knows that at the end of the month I will be receiving a specific salary. But a businessman does not know that at the end of the production what is going to be his income. how much is going to be his profit, because there is always a risk to the business. There can be cut down of demand, fall of demand of the good what he is producing, ending up in loss. There can be sudden huge demand towards the good, so it might end up in profit. So if the business does not take risk and enter, it don't know that whether it will be profiting out of taking risk or experiencing a loss. So only and only if the business takes the risk of production, then the ultimate outcome can be achieved by the business, which can be a profit or loss. If it's a loss, it's a kind of unfortunate event for the business, but if it earns a profit, it seems as a reward which is only earned if it takes the risk and enters into the business. Number 5, better reputation and goodwill. A business reputation or goodwill, or how much customers value its product, how much it is known to the customers, it depends on how much profit it earns. Generally, a profit-making business can actually advertise more, can give numerous sales to its customer, because it already have earned a huge profit. And in order to capture the market, capture the customer, if it has to charge sometimes a lesser price than the competitors so as to attract the consumers, they will do so, because they already have a huge profit backing. So profit helps the business to earn reputation and goodwill in the eyes of the customer. When you know that a business is profitable, it has already made a huge profit, means its commodities are very much high in demand, people trust its commodities, and that thought of it will attract hundreds more customers to the business. So a profit again symbolizes as a mark of reputation and goodwill. Now we will study about business risk. Nature of business risk. Now why does this risk factor arises? Risk is not attached to any other things like professionals or salaried people or those who are working under any organization. But when it comes to a business, there are certain risks. So what is the nature of risk? Number 1, risk, why it arises? It arises due to uncertainty. Now uncertainty, from the word, what does it mean? You are not certain. You are not certain about the future. You are not certain about what you are producing, whether it will be ultimately demanded in the market or not. There can be situations the demand is huge. There can be situations that you might end in high profit, but there is also a 50-50 chance of losing as well. You don't know that after production there might be no theft or robbery or anything like that. So a business house always knows that a risk arises due to their uncertainty or due to the fact of unknown future events. They don't know that what are the future events going to happen which might either adversely affect the business or might affect the business in a good way. So taking risk can end up in two things. Either you lose at the end or you gain at the end. But you don't know about the future, what is about to come. So risk, that is why it arises due to uncertainty about the future events. Number 2, risk is an essential part of every business. Now just now I said that any other profession or those who are working under organization, they don't have such risk. But business house knows that there is a set of things which is unknown to them. That is the future events which are unknown to them. It might affect positively to the business or it might end up in loss. That is why they know that if you are entering up in a business, you have to be optimistic that risk is always Essential part means it is always present in every business, whether it is small or a huge business. So risk is an essential part of every business, means whether you are having a small business or you have a huge business outlay, risk is always attached. Number 3, degree of risk, that means intensity of risk. How much risky it is. Intensity of risk. It depends on nature and size of business. Now what is the meaning of this? Nature of business means what products the business is producing. For example, when the business produces any essential commodities. In case of essential commodities, we know that customers will demand it all time. So that type of business knows that risk is there, but very minimum risk is present, because these goods which they are delivering is of essential type to the customers, and we don't leave the essential commodities from our consumption basket. But if the nature of product is such that the business house produces AC is a kind of luxurious good, or it produces gadgets, mobiles, or it produces fashionable items, then what happens? The element of risk is much more, because the nature of product is such that consumers or customers might even forego that or might even delay their consumption if they don't meet the monetary requirement. For example, car AC, they are luxurious good. If the consumer don't have money, they can skip it for future consumption, but they will not be buying it then or now when the business is delivering such product. So the business house is facing risk because the type of product they are producing is of luxurious type, and people don't cancel the essential items to go for luxury items. And if the goods are fashionable, if the business is producing some fashionable garments which are trendy now, but the trends or fashion, they are ever changing, so the business house don't know that these fashionable products will attract how many at the end, and fashion is every day updating. So the business might not be able to sell all its produce and end up in loss. So what can you understand from here? That intensity or degree of risk, how much the risk is, depends on what type of product the business is producing, depends on the nature of product. If the producer is producing some essential commodities, then that type of business will have less risky. And if they are producing some items, luxurious items, which if they sell will give them huge profit, but there can be chances when the customers might delay their purchase. And risk also depends on size of the business. If the business is a huge business, it has invested a huge amount of capital to undertake production of large scale. So what will happen? If this business, who has invested huge amount of money for production of, they are taking production under large scale, production in plenty, then if they face any kind of loss, that will be a huge burden for them, because they have invested a huge money prior to production, before earning any profit. But small business, they have a small outlay, they are only using a small amount of capital to start the production and producing in small scale. That means only few goods are produced. So even if it loses out at the end, it is facing a loss, but the loss amount will be less. The pressure of loss will be less, because it has only invested a small capital, small amount of money prior to production. Number 4, profit is a reward of risk taking. Now this point I am not going to explain, because I have already explained in this video earlier that until and unless a business takes risk, they don't enter it, they don't know what is going to be the outcome. It can be profit or loss. Now loss is definitely not a reward, it's a kind of punishment. So if they earn profit by taking risk, That is a kind of reward. Now we are going to causes of risk. What are the causes for which this risk or uncertainty arises? Number one is natural cause. Natural cause is beyond the controllable limits of the human beings. The businessman, even if they want to control loss through these natural causes, they cannot, because they are not under the purview of their control. For example, in case of flood, heavy rains, lightning, these are all natural calamities. Now it might so happen that the entire production have lost the power supply. So the production has stopped suddenly. Suppose due to heavy rains and flood, the goods that are produced and stored in the warehouses are totally overflooded with water and they are a waste. So these natural causes which result in a loss for the business are not controllable by the business houses. Number two, man-made. Now these uncertainty or loss always does not result due to these natural calamities. There can be many man-made things or human risk which the business may face. For example, if the business is employing so many laborers, there can be many laborers who are very careless, and this careless may result in wastage of the raw materials bought with money, and the businessman bears the entire cost of raw materials. So if due to carelessness raw materials are wasted, then the cost of production increases for the businessman, and when the cost increases, the revenue that they earn at the end minus the cost they have to bear gives their profit amount. So if this cost part increases, then the gap between the two will decline and profit amount will be less. Now, there are also laborers who are dishonest. Out of all the raw materials or products produced, they are keeping a certain part and selling on their own. So it is a loss for the business. Suppose the production takes place 2000 units daily, and this dishonest labor, he takes 20 units out of it before the businessman comes to know. So it's a kind of loss. Then strikes. Many a times laborers do go for strikes in order to increase their salary, in order to increase their benefits or perks, and they suddenly stop participating in the production. So what happens if they don't work for one single day? The entire production in per day may be 1000 units. So entire 1000 units of production are not taking place. So the business houses loses, because they have to bear the electricity cost, the machinery cost, the labor cost, as well as the rent of the land where they are carrying out the work. So for a day, it becomes costly if no work is taking place. And last is mismanagement or wrong management. So if the businessman takes some wrong decision on their part, then also it can lead to loss of business. For example, in winter, if they want to produce umbrellas, so do you think that business will actually have a positive profit? No, because in winter we don't need any kind of umbrella. Umbrellas are seasonal products and they will not be demanded for. So even if they, how much huge capital they actually waste on production of umbrella, it will be a wastage, because they will not be able to generate profit out of it, because it was a wrong decision on the part of the business management to produce umbrella in winter season. And the last cause is economic. Now economic cause means anything that is out of the business, that is also not natural, but the entire country's composition of demand or supply might change. Suppose demand may increase or decrease. If the demand for the businessman's product increases, then the businessman will be able to sell and earn more profit. If the demand suddenly drops, then he will not be able to sell his products in the market and earn less profit. Supply. there might be suddenly another competitor of this business house producing the same commodity. So he also supplies in the market, many consumers might buy from him, and if consumer shifts to them, then what will happen to the particular business in question? They will face a loss because they will be having less number of customers visiting them, as more and more customers are going to buy from its competitors. So if supply in the market increases from other business houses, the particular business in question might be losing, as it will lose out the hold on consumers. Then taxation policies. Now government charges tax. Now if government increases tax of the business houses, then out of whatever profit the business is making, tax is charged from income. So business's income is profit. So if tax increases, it results in cut down of income or cut down of profit for the business. So that might be a kind of change of economic policy, change of taxation policy by the government, which might hamper the business. And if tax reduces, government decides to take less tax out of income. So businessman's income is profit. If less tax is charged from here, then it will be a good scope for earning more profit. So this chapter ends over here, and you have to go through all the videos of this chapter, and these last two I will be telling now. They are just two types of risk which are present. One is speculative risk. What does it mean? There is a possibility of gain or loss. So such type of risk, if you undertake, they can either give you gain at the end or loss at the end. For example, what we have taken, demand. Demand can increase and give you more profit, or it can decrease and give you loss. So if the demand changes, then it can give you gain or loss. If the taxation policy increases, it gives you gain. It gives you loss. If tax reduces, it gives you gain. So these are types of speculative risk where there is a scope for earning either profit or loss. And pure risk are those risks which do not give you any chance of gain, but there can be two consequences: either you lose or you don't lose. So there is no promising gain at the end, but it is telling that either you lose or you not lose. For example, lightning or power cut. If power cut doesn't happen, you are not losing. If power cut takes place, then the business house is losing. If there is a good management decision, if there is no strike, then there is no loss, but if there is strike, there will be loss. So generally this is applicable for natural calamities like theft, robbery. If there is theft, you will lose out. If there is no theft, it does not promise you profit, but it shows you that you will not lose from the venture. So this is the end of the chapter. I will be providing notes. Please check the description box. Thank you.